Among our many earnings movers today, AT&T, the share's down about 1% after the company's cost-cutting efforts and 326,000 postpaid phone subscriber additions helped boost the company's free cash flow for the second quarter, but obviously that wasn't enough to boost the shares here. Free cash flow, it says it's going to reach this year of $16 billion, so reiterating that target here. The customer additions, though, that I mentioned, 326,000 was actually lower than anticipated, so that might be part of what's going on here.
Yeah, and they're also kind of committing to this incremental $2 billion plus in cost savings beyond the $6 billion that they have accomplished over the period of time, reflecting a march towards operating the company in a more focused and streamlined fashion. So adding on to some of the cost savings that they're looking to put forward here, it'll be interesting to see in what parts of the business they're looking to trim some of those costs there. But then additionally here, you look at the revenue base, the consumer broadband revenues, that was up 7%. They're saying that that was driven by AT&T fiber revenue growth of 28% there. They also saw about 251,000 AT&T fiber net adds. Just to put a number on that, that gives them about 14 straight quarters with more than 200,000 net additions in that part of the business.
Yeah, and the company, I'm just looking at some of the commentary from the conference call here. The company says CapEx is going to be $1 billion lower in the second half of the year. They are enacting some changes. They're going to cut down on headcount. And then finally, an issue that we have been monitoring, spurred by that in-depth investigation in the Wall Street Journal into buried lead cables, not just by AT&T, but by other telecom providers. AT&T did say last week in a court filing that less than 10% of its copper wire network had lead cladding for it. So, that's something to continue to monitor for these various big telecom companies.
Also, continue to Command F or Control F for anything mentioned around delinquencies as it relates to customers and just paying bills on time. That's something to pay close attention to, that we've been able to continue to question some of the company's leadership about just what they're seeing in some of those engagement levels.